Hey, what's up guys, welcome back to another video on Trade Now, and for this video we're back with another 1 minute scalping strategy, and I will be using the MACD together with the EMA for this strategy. So before we start this video, make sure to check out the link in the description box below. When you sign up with the link, you'll get to this fat-ass page where you can sign up for an account, and right now they're doing a couple of promotions, so you can get up to $600 deposit bonus when you sign up with Tradeiq. So by just depositing you can earn up to 600. That is a decent deal. But yeah, just check out the link. Fees are as low as 0.02% as well, and you can trade crypto there. So anyways, let's dive straight into this video. So for the indicators we'll be using, it is the MACD, of course. So you want to click on the first one together with the EMA. So for the EMA, you're going to change it to the 200 EMA. MACD, you're just going to leave it as it is. You can change the EMA color. I'm going to change it to white. So for this, the positions taking is relatively simple. When the price is above the 200 EMA, you only want to go for long positions. When price is below the 200 EMA, you only want to look for short positions. So if you look here, you can see that price is above the 200 EMA, you only want to look for long positions. So you want to alter the indicator a bit. You can remove the histogram, and you want to make the zero line a solid line. So you can make it like that, thicker, and make it a solid line. You can make it to white as well. So for this, you want to zoom in. So for you to take a long position, basically you wait for the price to be above, and there must be crossover of the orange line above the blue line, and the crossover must happen below the zero value area. So right here, let me show you guys, we have a valid position because you see that price is above the 200 EMA. We have the crossover of the orange line above the blue line, and the crossover happens below the zero value area. So there is a entry right there. Stop loss right below the recent swing low, which is right here, and you take a 1.5:1. You might want to put it at the EMA if the EMA is close by, so that you won't get stopped out, and a 1.5:1. So that is a winning position. So let's look right here. We have a crossover here, where you have the crossover of the blue over the orange. But unfortunately, if we put our stop loss at the EMA, we'll be stopped out right here. But we have another winning position right here. We have the crossover again, and the price is above the EMA. So you can take that position. Stop loss right below the recent swing low, and a 1.5:1. So it's a winning position, but obviously, wow, that was a crazy up movement. Here we have another position where we have the crossover here, but we will put our stop loss below the recent swing low. If we enter right here, we probably will put it at recent swing low. You can see here is sort of support, so you're gonna put it right there and aim for 1.5:1. Another winning position. So as guys can see from the positions that we've taken, 3 were wins and 1 is loss. So for this, since you have a risk reward ratio of 1.5:1, this would mean that a win rate of 50% would be profitable as well. So do not be afraid if you are losing. As long as you have maintained a 50% win rate, then it'll be alright. So now I'm going to show you guys how to take short positions. It is basically the same thing, but you just flip everything around. So what do I mean by that? So basically, when price is below the 200 EMA, you only want to take short positions. So let's look right here. You can see that clearly price is below the 200 EMA, and now you want to wait for the crossover of the blue line below the orange line. And where must the crossover happen? The crossover must happen above the zero value area, which is right here. You can see the crossover of the blue below the orange line. So you're going to enter a short right there. Stop loss, you want to put it at the EMA, and you have a 1.5:1. Here we have another crossover above the zero line, another valid position. You can enter on this. Where the crossover happens is this candle right here. Stop loss right above, 1.5:1. Another winning position right there. Let's look for more positions. Right here will be valid. You can see that we have the crossover right here, where the crossover happens on this candle here. and price is below the EMA, you want to put the stop loss at the EMA right there, and you aim for 1.5:1. Unfortunately, we'll be stopped out right there, so it'll be a loss. Let's look for another position. Here will be a valid position. We have the crossover here. You see that we have the crossover of the blue line below the orange line, and the crossover happens below the 200 EMA, and we have a 1.5:1. So another winning position. So anyways, you can see that this strategy has a few losses and has more wins than losses, obviously, but with a win rate of above 50%, you guys will be profitable, so nothing to worry about that. But obviously you're supposed to avoid certain markets so that you guys won't lose. Markets that I can identify that you guys should avoid is rangy markets like this, where there's no clear direction where it's going. It goes down, goes up, down, and up again. So you want to avoid this type of positions. You want to look for positions that are clearly going in one direction. And what do I mean by that? We look here, it's clearly going up. We look here, it's clearly going down. So these are the markets that you want to try to trade. So anyways, that's it for this video. Hopefully you guys enjoyed. Make sure to hit that like and subscribe button and to check out my other videos as well. So thank you guys for watching, and goodbye guys.